out there. This is Sam Kilmer, Managing Director of Cornerstone Advisors. Welcome to FinTech Hustle. In this fun episode, I have my co-host, Mary Wisniewski, Editor-in-Chief here at Cornerstone Advisors. Hey, Mary.
Hey, good to see you, Sam.
Yeah, and we also, Mary and I, get the opportunity to bring to you two rock stars from the halls of FinTech and BankTech in Doug Brown, who's the president of digital for NCR. Hey, Doug.
Morning, Sam. Morning,
Hey,
Mary.
hey. And also Mike Horrocks, who's the vice president of product at Baker Hill. Hey, Mike.
Hey, good morning, Sam.
Doing great. Good that you guys could join us. We've got one of the things I love about podcasting and but also just mainly industry connections and industry pals, if you will, is the variety of things going on out there. And Doug, I know you guys are in all kinds of things, digital and payments and origination. And Mike, I know you guys are in business lending and areas of origination. So one of the things I love about this is just getting lots of different perspectives. So thanks again for indulging my sense of being able to go on tour in this industry. So I just thought, you know what, let's just kind of kick off here. I would just love for our audience out there to learn a little bit about the day in the life of Mike and Doug. And so why don't we just kick it off with Mike, tell us a little bit about the day in the life of Mike Horrocks.
So, like you said, we're in all things commercial, small business, consumer lending, and around the risk of that, right? So I would say my day is all about prioritization. There's reg tech out there, right? That Section 1071 thing that my clients keep talking about. That's all I hear about right now from my bankers. How will we address regulatory changes that are out there? And so you definitely have to deal with those. But then on top of that, there are so many cool partnerships that we have opportunities to expand what we do. That on any given week, I'm getting multiple calls from different other fintech providers out there, and it's that call between what we can do, what we should do, right, and where we want to be in the future. And so it's all about that prioritization of understanding where we should put development dollars, where we should come up with partnerships. And that is really my average day, is just constantly looking at that landscape and trying to make sure that we're in the right spot, 5 years out, 3 years out, in terms of where the industry is wanting to go. And right now, unfortunately, reg tech has a lot of the mindset of everyone's mind right now, right?
Very interesting. Very interesting. Doug, what about your day in the life? What's the day in the life of Doug Brown look like?
Well, never a dull moment, Sam, is what I'll categorize it as. As Mike was describing, we're a big little fintech. If you think about us, we're connected to hundreds of end clients, millions and millions of consumers and businesses. And so much of what Mike said is very true. It's a constant prioritization exercise. And for me, the big challenge is to, separate the signal from the noise. And so that's why talking today with you all is great, but there is so much distortion and distraction, right? And false positives, if you will. Mm-hmm. So for us, it's about, breaking through all that, seeing what's real, and, helping the industry advance collectively, right? Be it fintech and banking and at the like, to help it move ahead in that, multi-year horizon.
Good stuff. Good stuff.
I mean, Doug, I like what you said about the signal from the noise, because, again, some of these partners, I'll be on a call with them and they'll be talking about all their AI, right? And I absolutely believe that if you have to be looking at AI in all your solutions, but as we peel back some of the layers on that, we find that it's, this funny thing called math that they're doing in the background, right? And my kids do that, right? It's not AI. It's, just some algorithms of math. So it's pulling back the noise that's out there.
Very true. Very true, Mike.
Mary, what do you think about that?
Well, AI? Oh my gosh, I don't know. I'm generally nervous. I hear what you're saying about the math behind it, because I think people are too using it too broadly and they're not being precise in the meaning. I think it's getting liberally used, and but I'm very nervous about it. But I live in Hollywood. Everyone's on strike right now. Certainly, AI is part of the conversation, a major part of the conversation, and it's going after the creative industry first. And I'll be really fascinated of how this plays out in banking, because I know everyone's testing things, but what are they actually doing? I don't know. Sam, have you heard of any
Well, I think Mike nailed it when he said there's sort of there's some semantical differences between what is an algorithm and what is AI. But when I look at a good chunk of the use cases for AI, I see a lot of consistencies with what has been deployed by, and John Meyer actually on our team has written up a great kind of synopsis of this, which is this whole notion of most of the fraud detection companies that have been doing this at scale for community banks and credit unions for years have been using AI, and in many cases even flat out machine learning to essentially continue to build up patterns to look for. It reminds me a little bit of, I met an exec, and I'm trying to remember her name. It's been so long. It's probably been 5 or 6 years ago. It was at an FIS conference, and there was an exec there of Capital One. I'll remember later who it was. But one of the things that she told me that was so cool was she said, she was essentially hired by Capital One to find bad stuff, to find fraud, and she was using some of these techniques, and she's now using some of those same techniques, but instead of in the risk category, she was deploying them in the opportunity finding or revenue generating category, which if you're a credit card lender like Capital One, I think, as you guys have all seen, if you're going to be a solid credit card lender, you have to be able to use data analytics in a very strong way, or you're going to be out of business because of either fraud or you're taking excessive credit risks that you didn't calculate well. I think what's happening now is we're starting to see some of the techniques that the fraud fintechs, bank techs, whatever you want to call it, and some of the credit on the consumer side, Mike, where it's the credit card, the stuff at consumer at scale. And we're starting to see some examples of where it can be deployed in other situations. In some cases, like business lending, small business lending may be more appropriate than, say, commercial in many cases, because there's just not enough data there's not enough volume in the data sets in a lot of commercial to be able to use some of it. But I like it. I'm also kind of wondering at some point, will we be able to just AI this whole podcast? You know what I mean? Let's just, okay, Mary, you and I are bots. We're asking Mike and Doug's bot agents. And oh, by the way, I don't want us to diminish the notion of distortion, because I've got a new Black Crowes live record back here that'll tell you that distortion can sound really amazing. So let's just not knock distortion entirely here. Distortion, But I think it's a great point. I'm glad you guys brought up AI, and Doug, I'd love to hear anything that you're seeing inside NCR or with any of your partners. Any promise that you're seeing there?
Yes, Sam, we are. And let me just start by addressing Mary's concern. She said she was scared by it. And I would suggest to Mary, that's why guys like Mike and I are out there testing and experimenting with this so that we can put it to good use. Because the one thing that we have seen is that if we don't use it, the bad actors will. And so let's understand it, know it, right, and put it through its paces together. So what I am seeing, Sam, is pretty interesting. You have to kind of break AI into two categories. There's AI machine learning, which has been around for years, right? And now we're talking about generative AI and large language model. And with the large language model, what we're finding is some pretty interesting use cases where if you contain the data set that it has access to, you get a much higher predictability of quality of a lending decision, mortgage processing, and other financial wellness and advisory type of functions. And so what we're seeing is when you apply the technology to those type of use cases, that's where we're starting to see some early breakthrough, and we're pretty excited about the promise that this will lend to the industry.
Doug, I'm also scared. I'm also hopeful. So I'm not totally on the scared bandwagon. But one thing, I don't know if everyone knows Theodora Lau, but she had used the tool to look me up for something I wrote, but it was crediting ChatGPT as the author. So I'm like, damn, this is not great. But I wanted to, you mentioned financial wellness, financial health, and Sam, I have to change the conversation to Apple because it just announced it had 10 billion in its savings, which is to me shocking, but they keep touting this is for your financial health, and of course they mean the daily cash from the credit card is just being pushed into the savings, which questions on whether if that's great for financial health. It is if you pay off the balance, right? But I am curious. I feel like just because it's Apple bringing up financial health, I feel like this is going to have broader implications and sort of bring this pressure back to banks in a way that maybe hasn't been true in the past. So I'm curious about that, but I'm also curious about this 10 billion in deposit. Did it shock anybody else? And I know there's another plot line of savers saying they can't move money quickly out of the account. So,
right. Well, let me start, Mary.
Take a shot at that.
Let me start on that one, Mary. I would say, Apple can sneeze and make $10 billion, right? So I'm not that impressed that their deposit draw was that great, especially on the rate they were using to do it. One other thing, I don't know if everyone in this panel has used it yet, but when you put the money in, it's like the Roach Motel. You can check it in, but you can't check it out. I have been waiting 75 days for $1,000 to come back to me because I was just experimenting with it. So, Apple's the master of UX and brand, and like you're saying on the deposit draw. However, you got to follow through, right? You got to make it real. That's something Mike and I understand with our customers, and they've kind of failed on that score. I would say, Mary, is one thing.
Back to Roach Motel. I mean, have you called their customer service? That's a long time for just $1,000 to be moved. Have you?
If I can find a phone number, Mary, I'd be happy to call them. But guess what? That's suppressed too.
Yeah, I mean, I can tell you right now, the older Horrocks children are big Apple fans, right? And they took it hook, line, and sinker. And again, Apple definitely caters to the user experience, right? I mean, every time you open anything of theirs, be it an account or a phone, it's pleasant, right? And so that's why they're there. But I go back to Doug's point, right? Is it real?
Yeah.
I'm not sure that they're at the same point where the Wells and the B of A's and anyone else is offering services as seamlessly as they should for a consumer.
And Doug, you had point two. Sorry, I followed up questioned with you, but what else were you smack talking about everyone's favorite brand?
Well, I think industry-wide, Mary, too, is that they as usual with them, they have very good timing, right? So they're launching in the midst of melee of deposit flow, crossing institutions, and everyone's kind of paying attention more than they maybe normally do. So yes, they're brilliant. Don't get me wrong, Mary, but just in our true snarketing experience and style of things, call out when they're not doing it perfectly well. So I think they captured a moment too when balances were moving quite substantially.
And I may be wrong on this, but it seems like it was Reuters or someone who had reported, and maybe Mary, maybe you picked up on this, that the other dimension that's going on here is that the back-end enablement of what Apple's doing may be in the process of switching out or potentially switching out from Goldman Sachs to American Express. Does that sound right?
That is the rumor, especially with the credit card. I feel like there's still a question mark about the savings. I mean, there's question marks about all these questions, but yes, in theory, they want to sell their credit card possibly to American Express and maybe savings, but I think it's nebulous at best. I don't know, Doug or Mike, if you have a different understanding, but that was my read of it.
Yeah, no, that's exactly how I understand it right now. I think there's still a lot of questions about where they want to take it.
Yeah, I got to tell you, I think one of the interesting things to me on this is that the execution is so important. And I think what we've seen, at least in those announcements, is that, Goldman Sachs, who, speaking of, nothing to sneeze at. I mean, talk about somebody who has lots of resources. And I think that, back to your earlier point around Apple using a pretty aggressive rate to get to that level. And I think this is one of the big topics that I feel like that that keeps coming up is where does the industry, whether it's banks, credit unions, fintechs, where do they build up the chops, build up the skills to provide value that doesn't constantly take rate juicing to create scale? Like, what are the digital marketing skills? What are the I think Doug, one of the things that you identified there was, what we can argue about whether the Roach Motel problem of can't get it out. I hear you on that. I do think it's interesting though that even if you develop the skills of the Roach Motel of getting people in, whatever that honeypot is, I'm mixing metaphors now, but anyway, what is that? What is the skill set that it takes to draw that isn't simply juicing rate all the time? And I think to me, that is the sauce that I feel like the industry is seeking right now. I don't know if you would call it digital marketing skills, but it's a combination of the product offering itself being different enough to grab attention, and then also using the new way of reaching people that's not just buy our stuff at buyourstuff.com. There's got to be a better hook, it seems like. But I don't know if you guys have any thoughts on that from your client work.
We have a client of ours that's in the Southeast, right? And I remember when they first signed on with us, it was a startup bank for all practical purposes, right? And they now are a dominant player in that Nashville market, and that's going to be really easy for anyone to figure out who they are. But when we did start working with Pinnacle Bank, I'll just make the Google search easy for everybody. They were. I mean, it was their entire approach was white glove, and so I think it goes back to were they offering the same products as the guy down the street at that point? Yeah, they were, right? So they knew that it was white glove treatment that would make it so that people would want to come and bank with them. And now they've gone, beyond that. They've gone into different product mix, and they've expanded beyond just traditional banking, and they continue to go down, different channels of engaging with the people in their markets, right? But they're constantly looking at how to interact with that customer and what value do they bring to it. And they just are killing it in that regard. And so, it doesn't matter if it's just a standard checking or a standard line of credit or, a business loan or whatever. People know that there's a differential in the relationship that they'll have there versus some other bank down the street, right? And there are they do have some really interesting competitors there. There's one bank there that is catering to up and coming country music stars, right? You'd feel really stupid if Garth Brooks walked into your bank, 20 years ago and said, "Hey, I'd like to open a checking account," and you said, "Garth who?" and he left, right? Well, it actually probably need to be more than 20 years ago. Let's say 30 years ago, right? But they're catering to a different crowd, and again, I think that's how they're going to grow, and that's how that you find that niche and then you run with it, and you're constantly testing and experimenting to see what else you can do differently.
Interesting. Doug?
And yeah, Sam, I think if you break that down for a minute, it takes a lot to attract them and onboard them successfully. That's what we do well, what Mike does well, right? We have a number of shared clients that do this, but getting them in, and it starts there. And then what is the bank? What is the credit union? What are they about at that point? What is it? It's the relationship, right? Is what they're driving, and they're looking to expand it. And so in order to do that, Mike alluded to white glove service. We have a number of customers who, applying the data in a meaningful way. The theme that Mary was excited about, wellness. Like if I can coach you and advise you and guide you, I move from just being a place to park money at a high rate to I'm the trusted partner, and you're going to help me. You got my back, and I'm going to buy more stuff from you. And I'm going to move my whole household relationship to you, right? Is I think the name of the game. Now to do that, that's easily said, but it gets back to, do you really know the customer? Whether it was Garth or anybody, like Do you know me when I come in? And now you're making me start over when I've already been interacting with you on digital channels in the banking center, whatever it is. Like that's where the real-time data has to be equipped. And we see, we've got customers too, like our Wintrust client out in Chicago. There are 15 community banks under one big brand, but they make you feel like this is deep community stuff. They know you for lending. They know you for everything. And so you really got to get deep into knowing them and being real and credible about it. And the people who try to do it, Sam and Mary, again, I'm going to take another swing at somebody, the trillionaires, they pretend to know you, but it's like, it's not relatable. It's not cred. It's like fat guy in Elvis suit, right? Does not look or sound good. And people see through that. So you got to be cred, got to be relatable. And that's what I think Mike and I are describing to you today.
Fat guy in the Elvis suit. Right? I'm all about that. That's a new hashtag. I think we've got Roach Motel, fat guy in an Elvis suit. Man, we're hashtagging. I think we've got some good stuff here, Mary. You were going to say something.
We are. And I'm also having strange visuals in my mind right now. I wanted to add on to that because, rate chasers, I used to work for Bankrate, but I still feel like it's just a niche part of the world that's chasing rates. So I think another part of the story, especially with Apple, it's like it's crunching all this data it has. I think I read that it's like looking at your iTunes history, so it can just KYC you in ways that perhaps like a normal bank can't. So like the just how quick it is certainly is like an advantage. And I think they set a new precedent of like how fast can you open something. Because another aside, a couple of years ago, I was supposed to make a video showing how long it took to open an account at a branch, and my colleague was doing it online. But plot twist, I got it open quicker than the person doing it online, just showing you. And I know this is a problem that still the industry is up against, but for her, she was out of state, so I think that was part of the complication, added fraud check. But I think that, speed to opening is certainly something that the industry has needed to get better on for years and still needs to improve, I would say.
So speed to opening, Mary, right, helps facilitate coming on board. It also facilitates going right out the door, right? So you got to keep you there and cater to you. And what Mike was describing, I think, is important. Knowing what is a white glove service to different customer segments and offering that. And don't offer me stuff I don't care about, right? It's time is precious and seeing all that. Exactly. So I think that's a key part of what we're describing here today. You got to put the whole formula together, the recipe.
Yeah, because you can touch me just a little too much with that white glove, right? It's like when the Horrocks kids go on the road trip, he's touching me, right? I do not want to be called by my banker every day as well. My life's just not that exciting.
You don't want to be called by your banker and referred to as Garth Brooks or Garth from Wayne's World or whatever else that they're...
Yeah, exactly. It's all right.
So part of this is the execution. I think the execution and delivery. I think, Mary, one of the things I think is interesting about what you were offering up too, I think, is that it's not just about the rate, although in terms of building up that deposit base to 10 billion, that was a big factor or a major factor. But I think the other thing is just how do you tie together the convenience of some of these things? And that's, while niche markets have been a struggling area because of concentration risk over the last year, I'm still a huge fan of the go-to-market with niches because I love how you can sort of tie together the execution of the delivery so that you start there and then go get the data. So it becomes, okay, what are some of the things that we want to assemble around musicians or around, whatever that niche is. I love that as a starting point for thinking about delivery as opposed to just let's go get some data and see what we can finagle. I think it's been an interesting part of what Apple's is.
Well, let's take it one step further, right? Like on the niche, SVB. Okay, great. They understood who they were servicing, right? They just had other issues. It wasn't that it was bad customers, right? It was a combination of time and circumstances that address that. It wasn't their customer base.
Hey, Mike, maybe they needed to hire your kid to work the math for them.
Yeah, who knows, right? So, yeah.
Well, I'd love to get. So we've talked a little bit about some things that we've seen work well I love your examples too, guys, of Pinnacle and Wintrust, and not to mention the Elvis reference. Those are always welcome on this podcast. Always welcome. Even grotesque Elvis references are always welcome. But I was wondering, what are you seeing that's just not working very well? Like when you guys are out there in the halls and listening to the back channel stuff and the elbow twisting with whether it's clients, prospects, or even at some of the industry trade shows or whatever. What are you hearing that's sort of disappointing or underwhelming, or that could use some more TLC right now? Anybody want to take a shot at that, Mike?
So, two things that kind of come to mind, and they're both kind of interesting for us from a Baker Hill point of view specifically. But one, I think it's kind of the merger and acquisition activity that could be or should be happening in fintech. Like I say, there's a lot of opportunities that we see or hear where people want to, partner or maybe even take it one step further, right? But, Sam, we've been talking about a recession just around the corner for the past 2 years, right? That recession, that 6 months to a recession is eventually going to get here. I don't know when. But, I think the M&A environment probably isn't as good as it should be right now, because a lot of valuations, a lot of situations are, based on an economy that people aren't quite sure what's happening, right? I mean, depending on who you talk to, it's great. It's, stagnation's right around the corner. The other day, someone said slugation. What does that mean, right? Sluggish-ation. So it's not stag, it's not inflation, it's just sluggish, I guess. I don't know. Anyway, so I think that's part of it. The other thing, but I'd say it doesn't necessarily work now, but I'm really hopeful and I'm excited to see what will come of it, is all this Fed Now, which again, we're not even in payments, right? So I shouldn't even be talking about it. But I love how we are finally seeing within, the domestic U.S. market, right? Something that brings us back up to the level of the UK and Brazil and, all these other people that have done it, right? I mean, our last big move was what? ACH, which was in the 60s, right? I think, I can't remember. I wasn't around even probably yet. But, it's good to see that we have some innovation there. Unfortunately, I think there's only like 44 banks that are using it right now, right? So you're looking at 1%. So we're going to have some adoption there, but I'm very, very hopeful about that. And so we'll see where that goes. And what I like about it is, again, and I'm not the one to say, that classic Reagan line, right? I'm from the government, I'm here to help. But if we get some standards that would help fintech and help banks and help everyone participate, in a more level playing ecosystem, so that we can get back to the point that we brought up earlier, that there's a reason why I'm servicing the people of Keokuk County, Iowa, right? Now, I will never have the tech, I will never have the spend of a B of A, but if I'm a small community bank servicing that county in Iowa, let me do it so that the people there have all of the things we've talked about, the financial inclusivity, the access to the funds, the ability to bank like a big bank person or however they want to bank and deal with their finances, right? So that's kind of what I'm looking forward to. I think that'll be exciting to see what happens. But it's just not quite there yet.
What do you think, Doug? What's not working well right now, Doug? What do you think?
I think we are constantly threatened, challenged by various cyber scenarios and fraud, Sam. So this is a problem where we're trying to reduce the friction and enhance the convenience you were speaking of and get to white glove at the same time, though, that introduces like a new risk to the system, and that risk, right, coming in the form of, so people are getting duped, right? The biggest fraud scenario we see and hear from our banks, it's not hard taker of the accounts as much as friendly or Tinder fraud. I gave Mary my creds because I trusted her because we had the social media connection as example, right? And it's that's just been the problem too. That is you got to bring the whole ecosystem, which includes the human end users of this, along for the ride. Mike's absolutely right. Standards, efficacy, reg standards would help a lot. But at the same time, we got to educate and bring along everybody, right? Because this is a very powerful, but has downside scenario, implications as we think about it. So we have to have a really broad strategy to tackle this for a mass market at scale.
Mary, any thoughts on that?
Okay, those were both meaty ideas. This one's less meaty, but still I think has merit. And that is, during the pandemic, Reg D was changed so that banks do not have to charge people if they go over, I think it's 6 convenient transfers. And I feel like banks haven't really, this could change a lot of different things. Certainly it changes it for the people who have over $250,000, like how they're managing their money, but also like for the people on Chime or presumably Apple, like you can move your money all around and that kind of changes the bank account. What was a savings account might not necessarily be used as a savings account in time. So I feel like that's a looming thing that might be needing more attention.
Mm-hmm. Well, it's top of mind, Mary, amongst it's top of mind. We hear that now where people are getting unlimited inbounds of things like questions about FDIC insurance and credit union standards, right? This is topics that, you're right, we're not even discussed 18 months ago. So
what other time can we say that?
Next podcast, Mary.
I think this may be the first podcast in fintech that opened and closed with RegTech or regulatory. Mike, you opened up with 1071, hardcore. And we're closing over here with, but I think it goes back to something Tom Shen, when he was on the podcast, referred to it as meat and potatoes fintech. I think one of the things that's really interesting about not just NCR and Baker Hill, but the careers of Doug Brown and Mike Horrocks is stuff that actually gets things done. Not necessarily always at the very front of the what people sometimes would call the bleed or the bleed edge. But I like the conversation that we've had. I think we've covered a lot of ground here with a lot of specific examples. Really thankful for. I know we have some other things we all have to do over the next day or so. So I want to be mindful of time. I want to let you guys go, but I wanted to say thank you for joining us on the podcast, and hope to see you guys out there at some of the events coming up.
Yeah, absolutely. It's going to be a busy fall. So
sounds good. It was fun.
You betcha. And thank you, Mary, as well. Appreciate it.